very much for that, Michael. Netflix is the global leader in entertainment. It also has single-handedly changed the media landscape to streaming. But is it a star performer on the stock market? The streaming giant has just released its first quarter results, and we're joined by Milford Asset Management Global Equities Analyst Deborah Lambert to dissect all of these results. Welcome to the studio, Deborah. Thanks for coming in.
Morning.
Talk us through these results from Netflix.
So the result itself was pretty strong. So Netflix has been benefiting from a few things. They have been cracking down on password sharing, which means that that's been driving new people to sign up to the platform. Plus, they've also put their prices up in some countries, including, unfortunately, for us here in New Zealand. And what we've seen is that they added 9 million new subscribers in the quarter, which took their number of subscribers to a record 270 million subscribers. And then all of these factors together meant that profits for the company were up 50% compared to this time a year ago, which is a big step up.
That is a leap, 50% increase in profit, because for a while there they weren't making any profit at all, but the projections were that it will become profitable.
Yeah.
So what kind of profit are we talking?
The profit step up is significant, but what was really interesting in the result was actually, despite all of these things sounding really good, the shares were actually down 9% on the day, and there were a couple of factors that drove that. So firstly, their revenue forecast was a little bit weaker than expected, and secondly, Netflix told investors that they're going to stop reporting subscriber numbers this time in a year. And so that means that investors really don't like it when companies stop disclosing important metrics, and that means that wasn't taken well. And the company pushed back on this, and they said, we're just trying to shift people's focus from what people are watching to how much revenue is growing. But the shares were down 9%. But even despite that 9% move down, the shares are up still 20% so far this year. So it's had a pretty good run.
Okay, so is that how have the shares performed over the long period of time?
Yeah, so if we think about looking back over a longer period of time, there's really been 3 acts of Netflix. So firstly, they've moved from being a DVD by mail company, so they used to send mails on the internet.
That's right.
Yeah. And
used to get them in the post.
Yeah, and then secondly, they moved to streaming by the internet, and then thirdly, in 2013, they moved to offering their own content. And then remember back, one of the famous ones was House of Cards with Frank Underwood, the anti-hero.
Yep,
yes, exactly.
Yep.
Exactly. And so if you had bought one share of Netflix back in 2002 when they listed on the stock market, that was $15. And then if you fast forward to today, those shares are now worth $570.
Wow.
So that means an average 33% return per year, but it's been a bit of a roller coaster. So for example, coming out of COVID, when there were so many people who were at home watching a lot of TV, coming out of that period, the shares actually fell a whopping 80% in 6 months. So it's been quite a volatile one.
Okay, so it hasn't been like a growth like that. It's been sort of down, then up, then down. But
yeah,
overall, 33% per year is pretty good.
But and interestingly, the shares are actually still below those COVID highs.
Okay.
And one of the things that Netflix has been talking about more going forward is using advertising to generate revenue. So they haven't done much of that. It's currently quite small, but going forward, that's going to be increasingly important. And how that's working is they're rolling out an ad tier. And so that's been done in 12 countries so far, including in the US, for example. And so it used to be $10 for a basic subscription, and now viewers can choose between paying $15 for a premium version or around $5 for an ad-supported version where they have to watch 3 to 5 minutes of ads per hour. And so this might be rolled out in New Zealand at some time soon, so Kiwis might have the option to choose between paying with their time or with their wallets.
Because we don't have that yet, right? We don't have that in New Zealand, because they talked about this last year and I thought they might roll it out, but they have the different tiers here, right? It's like $30 is their premium. If you want it in a lesser quality, it's a bit cheaper, and in a lesser quality, it's a bit cheaper than that. So we're going to start having ads options put in amongst that mix.
Maybe at some point they'll roll that out. And then another interesting thing that I've been looking at when I've been thinking about Netflix is why has it been so successful over this period of time? And there's 3 kind of factors that I would draw out around that. So firstly, their content. They have been able to deliver hit after hit. And in the US last year, guess how many years in a row they had the #1 original TV show?
I reckon it'd be like all the years in a row, probably.
Yeah, so it was 48 weeks in a row last year. They had the #1 hit. And then secondly, they had this huge subscriber base, which is twice the size of other competitors. And so that means if they have more subscribers, they can generate more revenue, which means they can generate more content, which means they in turn generate more subscribers. So they create this flywheel effect with their revenue. And then the third is they just have great technology. So they have been collecting data on people's viewing preferences for years, and they're super good at putting the right shows in front of the right people. And then they also have great skills in dubbing and translation. So that means that we can see shows that were produced in Spain, like Money Heist, like Squid Games in Korea, here at home in New Zealand. And an interesting fact is that last year, 97% of viewers watched a non-English language speaking title, which is pretty amazing when you think about it.
Yeah, Squid Game was one of those. Very quickly, the two CEOs. Why have they got two CEOs?
Yeah, this is an interesting one, and it's actually quite an unusual structure. So Netflix is a business. It's really an intersection of the content creation side of the business, and then also the technology is super important. So because you have two CEOs, you have Ted Sarandos, and he focuses purely on the content creation side, and then you also have Greg Peters, who focuses on the content side. That means that none of those important parts of the business is neglected. They're both equally important, and that seems to be working pretty well for them.
It is a fascinating company, isn't it? And it's doing really well at the expense of others like us. But thank you very much. I do appreciate you coming in, because it is fascinating to talk about that. That is Deborah Lambie, who is the Global Equities Analyst at Milford Asset Management. And we're talking business every Tuesday and Thursday, although today is Friday because we had yesterday off, thanks to our friends at Milford.